All right, folks, grab your favorite caffeinated beverage and get ready to dive into the thrilling world of cybersecurity, because today's headline act is none other than CrowdStrike. This cybersecurity juggernaut has been all over the headlines today, and not necessarily for reasons they'd want to invite investors over to a cocktail party for. Let's kick things off by talking the numbers game. CrowdStrike's stock took quite the tumble, dropping by as much as 12% at one point today before somewhat stabilizing with a drop of around 6.34%. And the blame game here, it's not what you think, because their recent quarterly performance exceeded Wall Street expectations. Yep, you heard it right. In Q4, CrowdStrike posted adjusted earnings of €1.03 per share on a revenue stream of $1.06 billion. Wall Street analysts were expecting less, around 86 cents per share on revenues of $1.04 billion. So what gives? Well, this is the stark reality of Wall Street, my friends. The magic word we're looking for here is guidance, and not the kind you get in high school when you can't decide whether to take up drama or basketball. Investors were spooked by CrowdStrike's forward-looking guidance, which isn't exactly painting a picture of rainbows and unicorns. The company's projected earnings and sales didn't meet the lofty expectations piled up by optimistic analysts. They're forecasting a sales range between $4.744 billion and $4.805 billion, and investors were hoping for numbers a tad higher. Even juicier, they're expecting earnings per share to be a bit light on the wallet, coming in far below what was on Wall Street's wish list. Adding fuel to the fire, CrowdStrike is still dealing with the aftermath of a global IT outage from July last year. You know, the kind where you can't check Netflix or your favorite meme account? That crisis resulted in customers' devices facing operational hiccups, days on end of them in some cases. CrowdStrike expects the fiscal first quarter earnings to fare poorly, projecting numbers well below analyst consensus. The outage resulted in some additional costly apple pie slices on their balance sheet, with incident-related expenses and tax expenses tied to acquisitions, adding more grits to the meal. Operating losses in the company's fiscal 2025 Q4 climbed to $85 million compared to a tidy $30 million operating income the previous year. Add to this a plunge in margins and elevated sales and marketing expenses, and you've got investors scratching their heads wondering if this growth is coming at a steak dinner kind of price. They are spending more, but their revenue growth is not as spicy as it once was, and Wall Street doesn't have the appetite for that. CEO George Kurtz is painting a comeback story for CrowdStrike, hoping that their stick-to-itiveness with clients and their singular platform excellence can deliver. With ambitions like reaching a $10 billion annual recurring revenue, he might just have a few rabbits to pull out of those executive sleeves. So there you have it. CrowdStrike is anything but dull today. The glamorous world of tech stocks, where one minute you're everyone's favorite banquet toast and the next you're the subject of annoying Thanksgiving table gossip. Will they bounce back? Only time, perseverance, and maybe a little bit of cybersecurity wizardry will tell. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.